Hey everybody, welcome to Mortgage Today for Friday, November 29th, 2023. And oh, what a day it was. UMBS, we're starting the day in the red. Down 11 basis points on the 6.0. The 5.5 was down 17. The S&P 500 traded just a few points away from its all-time peak on Thursday, extending its 2023 advance to nearly 25%, which is amazing. The Nasdaq 100 has The Nasdaq 100 has already posted its best year since 1999 on expectations that the Federal Reserve will cut interest rates aggressively in 2024. Treasuries extended Thursday's losses with the 10-year yield rising 3 basis points, but still more than 100 basis points below its mid-October high. Yesterday's $40 billion 7-year Treasury offering was awarded a yield of 3.85, the lowest since June. However, the auction disappointed expectations since investors were less willing to buy longer duration paper into the year end. The bond market will close early today. The bond market closed early today and will remain closed on Monday in honor of New Year's. Jobs will come front and center the first part of the year with U.S. job openings, initial jobless claims, ADP, and unemployment report all squeezed into a shortened first week. Many remain hopeful that cuts may come as early as March, but some Fed officials have hinted that it could be May before we see a cut. I think it'll be even after that. The Fed implemented 11 rate hikes in the latest monetary policy cycle starting in March of 2022. And I also wanted to include this passage from Brent Niatre's morning blog. In my opinion, the most dangerous words in financial markets are "this time is different" and we probably have a recession this year. In my opinion, the most dangerous words in financial markets are "this time will be different" and probably we will have a recession this year. The fact that 40% of borrowers skipped their student loan payment is an ominous sign. Spending has been artificially inflated by fiscal stimulus and rent debt holidays that are ending. People are not making their payments after this, which is going to impact FICO scores. The inflation dragon has probably been slayed, though it might stick around at a point above the Fed's target rate for a while as housing shortages keep shelter prices high. Global demand is falling. China is hitting a wall, which will keep energy and goods prices low. The market sees about 150 basis points of rate cuts in the next year, which is probably aggressive unless we hit a major recession. The Fed is nominally non-political, but Powell got his marching orders from Biden a couple of weeks ago to stop tightening. I suspect the Fed will prefer to err on the side of being too loose in the 2024 election year. As the Fed moves from tightening to easing, we should see a decline in bond market volatility, which will work to push MBS spreads lower. 2023 may be a year that we won't soon forget, but the past 2 weeks have been quite the opposite. Today's holiday shortened trading session did nothing to change the narrative. Yields were modestly higher overnight, giving chase to a slightly bigger sell-off in Europe. Domestic traders pushed back towards the unchanged level by midday, but sellers resurfaced at the 1 p.m. CME closed. Trading levels remained easily within the exceptionally flat range seen since December 14th. We continue to focus on next week's economic data, Fed minutes, as the first major sources of volatility in the coming 3 weeks. At the end of the day, at the end of the year, at the end of the month, all of them. We ended up with the UMBS 6.0 ending up at 101.50, which was down 6 basis points. The 5.5 was also down 6 basis points. But at 101.5, again, we are in the middle of that very narrow range, which have been two very firm Fibonacci levels. Looking at next week, we have some global PMI on Tuesday, which could move the market a little bit. ISM manufacturing PMI on Wednesday, but the big one is FOMC minutes, so we'll see the real things that people said about future in that. We'll also get job reports, ADP jobs and Challenger and jobless claims on Thursday. And then on Friday, we get non-farm payrolls, unemployment rate, as well as some more PMI data. So have a great long weekend. Get ready for the year. Make your plans, make your goals, and be inspired by our sponsor at WellThatMakesSense.com, where we have a great video series going on the amazing book Influence.